or it shows high risk and liquidity run conditions. So I'm looking at this very skeptically, and as a winning trader, you have to be able to cut losses short and see where price is not going to deliver your objectives and start exiting the positions so you don't take large losses. The 1% succeed because they have very big winners. They take the losses up and they cut the losses short. So I just cut off 4 contracts right there, and I still see very poor price action. No displacements higher. Displacement suspension block. So I have my fingers on the trigger. I took 1 contract up there, and the rest hit stop loss. On that trade, I just risked 0.6%. This new trade, this is the second trade for the day. I'm coming in with half risk. I'm risking 0.25%. Buying just 2 contracts, and I'm willing to pyramid if I see low risk and liquidity run conditions. I'm buying the breaker, retest on the breaker, which is also the high of the 5 minutes. I think the algorithm will spool up to, because of that momentum, to spool up to the target. So I add 2 contracts back on, and I'm giving it a chance to see if it's going to find support at this balanced price range. However, I'm trailing stops very tight because I know this is high risk and liquidity run conditions. So my risk is extremely small, just 21 ticks. And once again, order flow is not giving, is creating a barcode, consolidating. Alright, let's get into the setup for the session. Eventually I see price trade down. These 2 down close candles before the up move that took liquidity and drove into the high of this daily volume balance before rejecting lower. These 2 up close candles form a bearish breaker. I'm aligning it, that's the bearish breaker. Price trades down, closes below the bearish breaker and retraces up into its constant encroachment. That's why I'm getting short. My protection as a stop loss is above its high, and this is how the trade played out. Alright, look at that massive displacement lower towards the 830 opening price. I take 2 contracts off as a partial, and I'm showing my stops down to the high of the old new week opening gap. The order flow has been bearish. I've been talking about that from the higher time frames. The current, or at the open, we see this massive move lower, but notice lower quadrants of the open range gap has been rejected as price moves lower. Target is the last pool of liquidity before the void, and you see me, okay, that's it. I take 1 contract off at that level, was a partial, and I was holding the rest to, I see the rejection of that CB, and my entry is as price trades higher into it. I'm looking for mid gap of open range gap, and I'm looking to see price trade way down into full gap closure and a trade below New York PM lows. And I want to see price move lower. Since it just took Asian stops, I took 1 contract off. 1 contract was taken off at Asian lows. Price got to the Reaper, started retracing. I'm being patient, trying to hold the last contract for my full objective.